Hey guys, today is July the 13th of 2020, and I wanted to do an update on the uranium spot price. I realized that I didn't update my chart reflecting the latest, closing price of June of 32.80. So by doing that and reading some of Gann's cycle analysis, I wanted to show you some things that I've come across since my last video, and I did that somewhere between this morning and now. It's in the afternoon. So I wanted to post a quick update. I wanted to show you what I am researching. Gann says that in a bear or in a bull market, the market seldomly, rarely runs more than 3 to 3.5 in a year's up or down. And we can see that from this low to here, this high, that has been 3.49 years, pretty much 3.5 years. So that fits the criteria of Gann's theory, where a market, bull or bear, it rarely, seldomly runs more than 3 to 3.5 years. And this market has ran 3.5 years up in a bear market. So that's wanted to show you, number one. He also says that it should come a counter move of 3 to 6 or even a year in the opposite direction. So once you come to 3.5 years, you should expect a move either between 3 months, 6 months, or a year. Now I'm going to show you why we're in a danger zone right now, even though, we got this thing with COVID, supply demand issues. I'm just going to stick more to the Gann theory, and then let's see how it plays out. So for the bear camp, we're in a 3.5 year uptrend. And in Gann's theory, we should probably be halting just about right now and do a correction, a counter move correction in the opposite direction, as he would say, anywhere between 3 to 6 months, or you want to do extreme, could be a year. I don't think maybe a year, because I'm going to show you some other things that are lining up also. Next thing is, that's check one for a bear camp. Check two for the bear camp is the 1850 low that we did in December of 2016. If you use the squaring of price and time, you use price itself as a squaring mechanism for time, you can see that 185 weeks, we just hit it right now, this high. So that reflects that time of 1850. So that's 2 checks for the bears. Also, Gann says that watch out for any culminations between the 42nd month, which is the extreme, which is 3.5 years, and sometimes in the 23rd month. And the 23rd month was somewhere around here. He says also sometimes in the 23rd month, things don't really go to the extreme, and it just flushes down. And it looked like it was starting to happen right here, and then it kind of stalled and pushed up. But now we're in the danger zone. So that's the same thing, the 42 from the 3.5 year. Now, Gann also said to keep a watch on the 20-year cycle, and our low, the all-time low, was $7.10 on 2001. I'm assuming just January, because this is monthly. I don't know the exact date. So on January in 2001, we have the all-time low of $7.10. The 20-year cycle will take us to 2021 January, which is right here. You can see the 10-year cycle really didn't do anything exciting. The 7-year cycle from the Fukushima high, if anything, it just kind of stalled things, but nothing exciting or major. We have a low in place and we're trending higher? Yes. But in Gann's world, this is expected to happen, and now he's expecting for a pullback. And then you have on the 20-year cycle lining up over here. Another thing I wanted to show you, and I think I covered that in my last video, the all-time high is $136.22. Now, if that price is accurate and the data I have is accurate, you go 13.6 years into the future, and where does that take you? All the way to 2021. So the all-time high price is squaring out within time. The all-time high price is scoring out within years, using the scale of years, all the way to 2021. The all-time low, the 20-year cycle is coming up. So let's zoom in, and I'm going to show you some levels to watch in regards to the spot price. So let's say we're expecting a pullback. He says anywhere between 3 and 6 months to a year extreme. But we'll see. Levels to watch for the spot will be $28 just because of the swing pivot low. We could push all the way down here to $28. Hopefully that would hold. If that doesn't hold, let's see. Yeah, 28. That doesn't hold. This trend line from this low to here, you see that it respected it here, didn't get to kiss it here. Anywhere, let's see, from here to here, 25, 69, 24. See, if 3 months here, $25 to $26 should hold. If we fail this, then this is the all-time low of 710, 2001, locked with the swing pivot here, gives you this line right here. Let's say from anywhere from 21 to 2150 should hold. And if this doesn't hold, then we could retest the low of 1850. That's extreme. And if it's going to go really extreme, as Gann says, like for a year in opposite direction, then maybe we could retest the 710. But I don't know. That's really far out there. I'm seeing the cycle of the 20-year to see what happens. So, yeah, 2021, a lot of stuff is lining up here. I wanted to see the Fourier. Let's see what the Fourier is telling me. Let's see, Fourier. This was probably the third cycle, third overtone. Six, yeah. And there's more stuff there. October, crossover here, 2021. In the Gann square, you see this line right here. We hit resistance. So to sum it all up, I didn't want to make this a long video. Just wanted to show you that we're possibly entering a bear cycle. And it could be a short term, but it could go all the way to 2021. And then we'll see what's going to happen next year. But there's some key levels I told you to watch. If you see price action going lower, that could drag all the stocks down. And it could be an extreme, but we'll see. Time will tell. I'm going to sign out. Just wanted to give you this quick update because now I got the latest data of June. And looking at what I just showed on my video on Sunday, fluctuating lower, but we got to see, 3 to 6 months out to see how it really, price action is really moving now to see if this bear cycle is going to play out. Hopefully you like this video. Subscribe and sign, hit the like button, and I'll keep you posted on my thoughts on the uranium spot price.